Good evening. This is the video newsletter for buysellshort.com for Tuesday, November 18th. Roller coaster market continued today. Going into the last hour, we were, getting ready to break down to new lows, and then we saw a 300-point rally in a blink. Here we're looking at the Dow 15-minute chart. Resistance is the 200-day moving average, 85.60. That is also the downtrend resistance line of this bullish falling wedge that we've been stuck in for the last 3 weeks. Indicators, if we're able to close above, let's just say 8,600, then we should be in store for at least a rally to 91 to 9,300 on the Dow. We've got options expiration this upcoming Friday. Pretty much everyone and their mom is either short or in cash on the sidelines, which should make it pretty easy for the option crooks to jam the market higher. If we flip over to the daily chart, one thing to note here, 2 of the last 4 days, these 2 up days have been on way bigger volume than the down days. Now, granted, you can make the argument, a lot of the volume was selling till the end of the day, but you can see that we're starting to get increasing buy volume on the up days versus the down days, which is bullish. We still are in the middle of our W formation that we're playing. For all intents and purposes, this market is holding its breath, waiting to see what's going to happen with GM. If the clowns in Congress get around to actually giving these guys some money, we might avoid financial disaster. For those people saying let them go bankrupt, you're a moron is all I got to say to you. The market or financial crash that we essentially saw in September was all brought about by the government not giving Lehman Brothers $5 billion. The effects on the financial system, if GM is allowed to go bankrupt, will be 100 times that of Lehman Brothers. So pray and hope that these clowns agree to give the auto companies some money really, really soon. If we get news of a loan being given to GM and Ford, etc., we should easily see a 1,000-point rally in this market. SMH, nothing positive to say here, just newer lows. VIX, we had what should have been a top yesterday, then we extended higher today, but that little late day rally possibly could indicate a top here. Until we see the VIX breakdown, we're going to be in store for more of this BS market action of down 200, up 200, down 200, all in the space of a few minutes. Today may have finally been the end of this ridiculous VIX that we have. We need a break below 55 to, actually it's 53, to have any hope of any rally continuing. On one side note, the dollar looks ready to bust out big time, and I'm talking a big move to 100 plus, which should portend even lower gas prices and oil prices near term, and should finally see the price of gold take it on the chin. We should see gold in the 500s come Q1 2009. Stock plays, pretty much nothing new. We're sticking to the ETFs. DIA, January 96 calls and 94 calls. QQQ, January $32 calls. And that is how we're playing this market right now. Financials as well. If we do see an extended rally, Citigroup, BAC is another one, are ways to scalp intraday on the move. So if we start seeing, the market extend 100-200 points, you should be able to get, a 50, 60, 75 cent scalp off stocks like C, MS, and BAC near term. Wouldn't be jumping into stocks until we get a break above 9K. Even when we see these big up moves in the market, stocks just keep making new lows and lower highs. The only thing really moving are the really, really fluid large caps and the indexes and the ETFs. That is it. And until we see more strength and stocks actually make new highs, we're sticking to that strategy and pretty much avoiding most stocks. Stem dropped today. Reason, the news that it dropped on last week was made official today, so they sold the stock. Kind of ridiculous, but would like to see this one snap back tomorrow above 120. So again, even the momentum stocks are unable to hold in this market, which puts a bad taste in your mouth for holding any sort of stock other than ETF and call options at this stage. Nothing else really to add other than this market sucks balls, and hopefully we see some follow through and a break above this 200-day moving average at 85.60 tomorrow, so that we can make the shorts at least pay for a couple of days to make us feel a little bit better. And that's it for the video tonight. See you guys in the chat room tomorrow. Good night.